The life of a trader. It's kind of like trying to keep your balance on a roller coaster while holding a tray of drinks. Frustrating when you get stopped out just before that trade decides to shimmy in the direction you predicted. Understanding market volatility is your trusty safety belt, keeping you from the common pitfalls that make you scream like a child at a haunted house. Now, integrating the ATR, no, not some fancy culinary dish, into your trading strategies can be a game changer. This nifty tool can sprinkle a little magic on your risk-reward ratio, helping you transform those pesky losing trades into triumphant victories over time. It's like turning lemons into a sweet, refreshing lemonade, but without the sticky mess. The ATR indicator is like your trading coach, dishing out the lowdown on market volatility. It guides you to place your stop losses with the precision of a surgeon, only minus the medical degree. Embracing this adjustment means fewer unnecessary losses and more trading glory. Who doesn't want that, right? Speaking of glory, the ATR indicator provides the average price movement of the last 14 candles. No, not the scented ones that make your living room smell like a spa. This is crucial for assessing volatility across various currency pairs. It's the key to making those informed trading decisions while avoiding that panic-induced coffee spill on your trading desk. And let's not forget, different currency pairs are like siblings on a sugar rush, some just bounce around more than others. Recognizing this difference is vital for setting stop-loss levels that won't send you running for the hills. Because nobody has time for a sibling rivalry in their trading portfolio. Now, timeframes also play a role in your volatility drama, requiring adjustments to stop-loss sizes based on how long you intend to stare at your screen. This adaptability is your secret weapon for minimizing losses and enhancing your trading effectiveness. It's like adjusting your underpants for comfort, but we'll keep that analogy a bit less personal. Understanding market volatility is as crucial as knowing when to mute your Zoom call, especially when it's time to set those stop-loss levels. Using indicators like the ATR is like having a trusty GPS guiding your trading strategies. Trust me, you don't want to end up lost in the woods of bad trades. If you're looking to plot the ATR indicator on TradingView, it's as easy as searching for average true range. Imagine typing into your favorite search engine for cat videos. This functionality helps traders visualize market volatility, which is essential for making those bold, confident moves. Thank you, technology. Backtesting with the ATR indicator is like taking a peek into your trading crystal ball. It's fascinating how you can hover over specific candles to see historical ATR values, enhancing your strategy development like a pro chef mixing secret spices into a dish. Yum! And let's dive into the elegance of placing a stop-loss correctly with the ATR. Avoiding being whipsawed out of trades is crucial for maintaining your sanity. It's like trying to hold on to a bucking bronco. You want to stay on during those market fluctuations instead of being tossed off unceremoniously. Now, understanding the concept of false breakouts is essential for traders. Capturing these can provide significant opportunities, like finding a hidden stash of snacks when you're starving. Who doesn't want to enhance profitability in various market scenarios? When utilizing the ATR strategy, swing highs and lows become your best friends. Kind of like that one pal who always knows where the party is. Recognizing these points can lead to better entry and exit decisions, making you look like a trading guru instead of someone just winging it. Grasping the significance of swing highs and lows is key as they indicate potential reversal points in the market. Proper identification aids in making informed decisions. Think of it as knowing when to pull the brakes on your car before you drive off a cliff. Dramatic, yes, but you get the point. The average true range, ATR, is truly the MVP of volatility measurement. It helps determine the perfect conditions for breakouts like a savvy matchmaker. It plays a crucial role in setting those risk parameters effectively, ensuring you don't get burned in the dating pool of trading. Now, let's focus on stop-loss and target settings. They're fundamental to managing risk in your trades. Properly placed stop-losses can protect against significant losses while targeting appropriate gain levels. It's like wearing a seatbelt. It's all about safety first, people. The ATR value helps determine the volatility of a candle. Yes, the candles are back. This information is critical for informing your entry and exit strategies, guiding you on when to jump in or gracefully step back. Timing is everything, like the perfect punchline to a joke. Utilizing the ATR can unveil potential false breakouts, allowing savvy traders to make well-informed buy trades. Recognizing these patterns is essential for maximizing profit potential, because who doesn't want to earn a little extra to fund that dream vacation or perhaps a nice bottle of wine? And finally, the EAP training program offers advanced strategies and mentorship for traders eager to level up their skills. Participants receive direct support and trading insights, like having a seasoned pilot at the controls while you take your first flight.